Hi everyone, this is Venkatanarayana. Today I am going to discuss profit loss analysis of PVR Limited stock. This is not a recommendation. We are discussing this stock for education purpose only. Before going to take any financial decision, please contact advisor. Please concentrate on the process to analyze any stock fundamentally. First we will discuss about PVR stock. Here, PVR Limited is the market leader in terms of screen count in India. The company has over the years consistently added screens both organically and inorganically through strategic investments and acquisitions, which includes Cinemax Cinemas in November 2012, DT Cinemas in May 2016, and SPA Cinemas in August 2018, which added 138 screens, 32 screens, and 76 screens respectively to our screen network. Remember this years 2012, 2016, and 2018. We'll discuss these years at the time of profit loss statements for these years. Currently, we operate 845 screens in 176 cinemas in 71 cities in India and Sri Lanka with an aggregate seating capacity of approximately 1.82 lakh seats. That means they have 845 screens in 176 cinemas in 71 cities and they have 1.82 lakh seats capacity. They are providing movies in different formats. Those are PVR Direct Cuts, PVR Gold Class, PVR IMAX, PVR Superplex, PVR P, PVR Playhouse, PVR ECX, PVR Premier, PVR Icon, PVR Lux, PVR Cinemas, and PVR Ustav. So, how they are getting revenue means here we have a diversified revenue stream and generate revenue primarily from box office and non-box office, which primarily includes revenue from sale of food and beverages, advertisement income, convenience fees, and income from movie production, distribution among others. Now we will discuss profit loss statements of PVR Limited. Open web browser and type raystar.in. Here search PVR Limited and here we have information about PVR Limited. PVR Limited related to film distribution. So current market cap of PVR Limited is 7,342 crores. Face value is 10. So here price to book value is 5.36. Here we have shareholding pattern. Promoter contains 18.79%. This is a negative. Why negative means here promoter contains low percentage. Public contains 10.17%. Foreign investors contains 34.6%. Domestic investors contains 30.05%. Here price chart for 10 years. In 2010, price of PVR Limited is 183 rupees. Current price is 1306 rupees. If you see this price chart, here in 2010, 182 rupees. In 2012, 2024, that means it was increased from 184 rupees to 224 rupees in 2 years. Later, from November 5th, 2012, it was increased from 224 rupees to 725 rupees on 2016. Later, it was increased from 725 to 1171 rupees. Later, decreased to 1000 rupees. Later, it was increased 1000 rupees to 1520 rupees. Later, decreased to 1183. Like that. So, in February 17, 2020, price is 2052. This is the highest price of PVR Limited. Later, due to COVID, price was decreased from 2052 rupees to 789 rupees. Later, it was increased from 789 rupees to 1311 rupees and currently 1330 rupees. If you invested in 2010 at 192 rupees, current price is 1330. That means you got 1150 rupees profit from 2010 to 2020 in 10 years. Here we have revenue CAGR for 10 years. 10 years revenue is 22%, 5 years is 13%, and 3 years is 13.52. So here revenue was decreased from 5 years. Here if you see the profit after tax CAGR, For 10 years 13%, for 5 years loss, that is 22% loss, for 3 years 39% loss. Now we'll discuss quarterly results of PVR Limited. So here we have results for December 19, March 20, Jan 20 quarter and September 20 quarter. Here we have results for year on year. That means December 18, December 19, March 19, March 20, June 19, June 20, September 19, September 20. Here if you see the net sales, December 18 to December 19, 8.6% growth is there. In March 20, sales was decreased 22%. In June, sales was decreased 98%. In September, 95% sales was decreased. If you observe the sales are decreased drastically. Why sales are decreased drastically means due to COVID, theaters was closed. Due to that reason, here sales was decreased. If you see the interest, here in December 19, interest was increased from 37 crores to 122 crores. If you see in March, interest was increased from 39 crores to 117 crores. If you see here in June, interest was increased from 131 crores to 124 crores. If you observe in September 20, interest was increased from 111 crores to 122 crores. Here this is the negative point. Why negative point means here sales was decreasing but interest was increasing. That means they have more debt. Due to this high debt, they may face problems in the future. If you see profit before tax, in December quarter, profit before tax decreased 34%. Here they have loss. Previous year 74 crores profit, this year 72 crores loss. In June quarter, 28 crores profits to 341 crores loss. In September quarter, 278 crores loss. Now we will see profit after tax. Here in December, profit after tax decreased by 34%. In March quarter, PVR Limited have losses 47 crores profits to 74 crores loss. In June quarter, 17 crores profits to 225 crores loss. In September quarter, 47 crores profits to 183 crores loss. If you observe this profit, so here COVID was started in March, but PVR Limited was in loss in December itself. Here profits was decreased from 55 crores to 36 crores. Here 34% profit decreased. So from March onwards, so they have losses 75 crores, 225 crores, 183 crores. We'll add these losses 183 crores plus 225 crores plus 74 crores. So here they have 482 crores loss, and here interest was increased 122 crores, 124 crores, 117 crores and 122 crores. So due to this high interest and losses, so this company may face problems in the future. If you want to invest in any stock for long term, then we need to analyze at least 10 years about that company. Here we are analyzing PVR Limited for 10 years from 2011 to 2020. Here we have net sales and total expenditure, other income, interest, profit before tax, tax rate, profit after tax, profit margin, profit growth. First we will see the net sales of PVR Limited from 2011. Here we are checking consolidated figures. If you want to analyze any company, then we need to give more importance for consolidated figures. So here we have sales from 2011 to 2020. In 2011, 459 crores, later 517 crores. In 2013, sales was increased from 517 crores to 806 crores. Here 55%. Here 67%. And here sales decreased. And here sales increased. And here decreased. Here decreased, here increased, here decreased. Due to COVID, Here they don't have net sales, so this is negative. If you see this sales, here for every alternative years, here sales are decreasing. So here sales increase 2 years, later decreasing, increase, decrease, decrease, increase, decrease. Here in 2013 and 2014, sales are very high. Later in 2016, 25% and 2019, 32%. We need to check what is the reason to increase this much of sales. So if you go to About Us, here in 2012, they acquired Cinemax Cinemas. So at that time, they got 138 screens. Later, in 2016, they acquired DT Cinemas. Due to that, they got 32 screens. In 2018, they acquired SPI Cinemas. Due to that one, they got 76 screens. So in 3 years, they acquired many screens. Due to this reason, their sales was increased. Here in 2013, 2014, sales was increased due to acquisition. And then 2016, sales was increased due to acquisition. 2019, sales was increased due to acquisition. Now we'll check total expenditure with sales. Here expand this one, total expenditure. If we observe this expenditure, here expenditure 377 crores in 2011, then 445 crores, 695 crores. Here expenditure increased from 445 crores to 695 crores. This is a drastic increase. Here also 1143 crores from 695 crores. So these are drastic increase. Why here expenditure increase means due to acquisition, sales increased and also expenditure also increased. In 2016, expenditure increased to 1567 crores from 1281 crores. So due to acquisitions, here expenditure increased. Now we'll see where expenditure is going for each individual. So we have different types of expenditure. One is power and fuel cost. Second one, employee cost. Third, manufacturing expenses. Fourth, general and admin expenses. Next, selling and distribution expenses. Next, miscellaneous expenses. PVR Limited operating movie theaters in the cities. So due to that one, they need to pay more money for employees, manufacturing expenses and general admin expenses. If you see this one for power and fuel cost. So in 2011, they paid 4.89% with sales. That means here sales are 459 crores and power cost is 22 crores. Here they are using 4.89% money from sales for power cost. Here 28 crores, 51 crores, 96 crores. Here power cost increased from 28 crores to 51 crores, later 96 crores. Why means here they acquired movie theaters, due to that one power cost also increased. So here percentage of sales 4.89%, 5.4%, 6.4, 7.16, 7.5, 6, 6, 6, 5, 6. So up to this year, power cost was increased. Later they reduced small amount. PVR Limited operating in cities, so they need to pay more money for the power. So they are paying 6% for power and fuel cost. Let us check employee cost. Here employee cost is in 2011 10.3%, 10.8, 9.8, 9.6 like that, 10.4, 10.89, 10.93, 11.53%. So PVR Limited operating in cities, they need to pay more money for employees. So they are paying 11% for employees. Let us manufacturing expenses. So manufacturing expenses is in 2011 29%, 34%, 34, 34, 34 like that, 30%. Manufacturing expenses means PVR Limited need to buy movies from producers. They need to pay money for those box offices. So here they are paying 30 to 35% for movies. So this is high. So later general and admin expenses. Here 18%, 22 percentage, 22 percentage, 23 like that, 21. In 2020, here general and admin expenses are 6.47 percentage. It was decreased from 21.8 percentage to 6.4 percentage. We need to find the reason why this much of percentage was decreased up to 2019. So the range was 21-22. In 2020, 6.47 percentage. We need to find this reason. This is very important. Later, selling and distribution expenses. It was in the range of 12.9 percentage to 1.75 percentage. So current is 5.15 percentage. Miscellaneous expenses, those are 1.09 percentage, like that 1.47 percentage. If you observe expenditure carefully, here power and fuel cost is in the range of 6 percentage, and then employee cost is 11 percentage, manufacturing expenses 30 to 35 percentage, general and admin expenses are 21 percentage, selling and distribution expenses are 5 to 2 percentage, miscellaneous expenses are very less. So we can exclude miscellaneous expenses. But if you see these expenses here, 6 percentage, employee cost 11 percentage. That means 6 plus 11, 17, 17 plus 30, 47, 47 plus 21, 68, 68 plus 3, 71. So here they are spending 71 percentage from sales for expenditure. So this is very high. We need to analyze expenditure very carefully to invest in any stock for long term. Here PVR Limited expenses are very high. So now we'll see other income. Here other income in 2011 is 17.81 crores. Later 15 crores, 14 crores, 18 crores like that. Here in 2016 other income is 73 crores. In 2017, 71 crores. This is very high. Here 34 crores, 35 crores, 40 crores, 137 crores. Other income means, so this income is not related to core business. How other income will get it means, they can get the other income from interest or dividends or sale of any assets. In 2016 and 2017, other income is more. So we need to check reason for other income here. And also 18, 19 also 35 crores, 34 crores and 20, 40 crores. Here we need to check what is the reason for other income. Let us check interest. If you see in March 2011, interest is 16 crores. Later here 18 crores. Later 36 crores. Here interest was double. That means here they took more debt. Later here interest was double from 36 crores to 79 crores. Here 1 crore reduced, later increased, here reduced, then increased, later here increased from 83 crores to 128 crores. That means here they took more debt. Later in 2020, interest was increased from 128 crores to 481 crores. This is very high. So here interest was tripled. Here we need to check the reason for more interest, why they took more debt and where they are using the debt amount. So here interest amount is increasing, that means the debt was increasing. If any company was more debt, then they may face problem in the future due to high debt. And depreciation. So depreciation in total on 67 crores, 36 crores, 56 crores like that. So later depreciation was increased 115 crores, 138 crores, 153, 191, 542 crores. So here this depreciation was very high. We need to check reason for high depreciation. Now we'll check profit before tax. So in 2011, profit before tax is 15.7 crores. So here 33 crores, 33 crores, later 49 crores. Later profit before tax decreased from 49 crores to 14 crores. Then it was increased to 156 crores. Then here 156 crores. Then 195 crores. Here 300 crores. Then later it was decreased to 90 crores. Here they have losses 632 crores. We need to check reasons for this loss and this high profit before tax. Here they have more losses. Why they have more losses means this is last 12 months profit before tax. Due to COVID, cinema theaters are closed. So due to that reason, they have losses. Here we have tax rate. So tax rate is very important to analyze any company. So in 2011, they paid 97% tax rate, then 18%, here minus 38%, 3.6, 6.5, 32%, 37% like that. So up to 2015, they paid very less tax. So normally any company need to pay 30 to 35 percentage range. Here up to 2015 they paid very less tax. Later they are paying tax rates around 30 to 35 percentage. Here 32 percentage, 37 percentage, 36 percentage, 36. Here 69 percentage. We need to check what is the reason for low tax rate up to 2015. Later here normal tax rate. In 2020 they paid 69% tax rate. Here we need to check what is the reason to pay 69% tax rate. Later we need to check profit after tax. If you see this one, in 2011 profit after tax is 8 crores. Here 25 crores, 44 crores, 56 crores like that. In 2020 27 crores. Now we'll see profit after tax with sales. In 2011 they got 459 crores sales. From this sales, they got 8 crores profit. So what is the profit after tax margin mean? Here we need to check profit margin. Sales is 459 crores and profit is 8 crores. So here profit margin is 1.78%. That means from this sales they are getting only this much of amount profit. So this is very less. If you compare with saving account will give 4% interest. But here PVR Limited getting only 1.7% profit margin with sales. This is very low. So this is one negative. Let's check with 2012. Here 517 crores sales. Profit is 25 crores. That is 4.9%. Later 5.5%, 4%. Here 0.86%. If you see 2015, here sales are 1477 crores and profit is 12.76 crores. Here profit margin is 0.86%. So from 1477 crores sales, they are getting profit only 12 crores. So we need to check the reason for very low profit margin. Later 5.3%, 4.5%, 5.3%, 6.19%. Later in 2020, 0.82%. Here they got 3,414 crores sales, but profit is only 27 crores. That is 0.82%. This is less than saving account interest. So if we get very less profit margin, then it will be difficult to manage the business. So here we need to check what is the reason for low profit margins. Later from March 2020 onwards, we have 3 quarters. Those are March, June, September. So for these 3 quarters, they got 447 crores loss. Now we'll check this loss with this profit. Here in 2020, they got 27 crores profit plus 190 crores plus 18 they got 125 crores plus 17 they got 95 crores profit. Here 437 crores for 4 years profits. In 2020, 3 quarters itself, they got 447 crores loss. Now they want to recover these losses, so it will take at least 4 years based on profits. Due to these losses, PVR Limited may face the problems in the future to recover the losses. So we need to observe carefully in the future. Now we'll see few more things related to PVR Limited. Here we have pvrcinemas.com website. In this website, we'll check few financial details. Here we have screens. In 2016, they have 516 screens. 2017, 579 screens. Here 625 screens. 763 screens, 845 screens. Yes, screens are increasing from 2016 to 2020. So this is positive. Yes, seats also increasing from 1 lakh 18,124 to 1 lakh 81,917. Here we have cities. In 2016, PVR Limited contains movie theaters in 46 cities. Here 50 cities, 51, 65, 71. Now observe carefully about occupancy. So in 2016, occupancy is 34.3%, here 32%, 31%, 36, 34. What is this occupancy? Occupancy means, for example, PVR contains 100 seats, so it's filling only 34 seats only. In 2017, only filling 32 seats for 100 seats. 2018, 31 seats for 100 seats. In 2019, 36 seats for 100 seats. In 2020, 34 seats for 100 seats. So this is very low. Due to this reason, they are getting less profits. Later we will check few more things. Here where they are getting sales. Here income from sale of movie tickets. In 2016, they got sales from movie tickets is 995 crores. Here 1124 crores, 1247 crores, 1635 crores, 1731 crores. So income from sale of movie tickets. If we check this one, film exhibition cost, that is 419 crores, 465 crores, 537 crores, 701 crores, 733 crores. So they are paying 30% for film exhibition cost. Already we checked in annual reports for in expenditure. So sale of food and beverages, they got 497 crores, 579 crores, 624 crores, 858 crores, 960 crores. Here consumption of food and beverages 124 crores, 140 crores, 159 crores, 238 crores, 263 crores. So employee benefit expenses 185 crores to 393 crores. Rent and CAM 419 crores to 732 crores. Other operating expenses 406 crores to 715 crores. If we check for financial 20, here total revenues is 3,452 crores. Expenses are 2,838 crores. If you observe these figures, so income for sales of movie tickets they are getting this amount, but they need to pay more for film exhibition cost and employee benefit expenses, rent and CAM, other expenses. Where they are getting more profit is sale of food and beverages. A sale of food and beverages they got 497 crores, but consumption of food and beverages is 124 crores. That means they are getting 500 crores, but they are spending only 124 crores. So this is positive point. Later here they are getting 579 crores from food and beverages, and they are spending 140 crores. Yes, 624 crores getting and spending 159 crores. Here they are getting 858 crores, but spending only 238 crores. Here they got 960 crores from sale of food and beverages, but they spend only 260 crores. Only this is positive point. So PVR Limited getting more profits from consumption of food and beverages and less profit from income of sale of movie tickets. This is negative point. What we understand based on analysis of profit and loss statement is, so current market cap of PVR Limited is 7,342 crores. So promoter contains 18%, this is negative point, and price to book value is 5.36%. So here price to book value is high, so this is negative point. In 2010, price is 183 rupees, current price is 1300 rupees, so it was increased from 183 rupees to 1300. So this is positive. Investors got more returns from this stock. Here revenues are good for 10 years, but here revenues are decreasing for 5 years and 3 years. And if you see this one profit after tax, for 10 years is 13%, but for 5 years and 3 years, those are negative 22% and 39%. So this is negative point. Later for quarterly results, due to COVID, so they are getting losses from March. In March, they got 74 crores loss. In June, they got 225 crores loss, and September, they got 183 crores loss. In December, profit is decreased. Later, what we understand based on annual reports is here sales was increased from 2011 to 2020. Here, for every alternative year, sales are decreasing. Here, sales are increasing. Parallelly, expenditure also increased. The expenditure increased from 377 crores to 2340 crores. Why sales are increasing means so PVR Limited are operating in cities. In cities, they need to pay more power and fuel cost, employee cost, and exhibition cost, selling and distribution cost. Due to this high cost, expenditure was increased. Later, other income in 2016 and 2017, other income was increased. We need to find the reason for other income. Later, interest was increased from 2011 to 2012. In 2011, interest is 16 crores. In 2020, 481 crores. Here, interest was tripled from 2019 to 2020. We need to find the reason for more interest. Here, they took more debt. So, we need to check how much debt they took and where they are using that debt. Here, we have profit before tax. Profit before tax decreased in 2020 and increased in 19 and 18, 17. We need to find the reasons for this profit before tax. So here we have tax rate. Tax rate was very low up to 2015. Later, normal tax rate from 2016 to 2020. In 2020, they paid 70% tax rate. We need to find the reason for high tax rate. Here we have profit after tax. Profit after tax is increased from 8 crores to 27 crores. If you compare with net sales with profit after tax, in 2020 they got 3,414 crores sales, but profit after tax is 27 crores only. This is 0.82% profit margin. This is very less. In 2019, they got 3,085 crores sales, and profit after tax is 190 crores. This is 6.19%. For 10 years reason, 2019 is the highest profit margin. If any company contains more than 8% profit margin, then it will be good. Here, profit margin of PVR Limited max is 6.19%. This is negative point. Later, occupancy of PVR Limited is 34% from 2016 to 2020. This is also very less. Later, we observed they are getting more profits from sale of food and beverages, but they are getting less profit margin from sale of movie tickets. This is negative point. That's it for today. Thank you for watching. Have a nice day.